Hello there. This is James, and you're watching OneRoyal. It's live. In today's program, I want to discuss if the two biggest economies in the world are actually talking, what implications that means to the market, or the effect it's having on the market. Plus, Google seems to be raking it in, but what does that mean for the other Mag 7 companies? As well as that, we'll have a look towards what is going to be pretty much a very exciting week next week. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So first of all, I want to talk about the mixed messages we are getting out of both Washington and Beijing. Because as we know, the US and China are really in the middle of a massive trade war, the two biggest economies in the world. And obviously the market is on tenterhooks because this has implications not just to China, not just to US, but to all of us, the whole global market. And like we said, there were signs at the beginning of the week that this trade war could come to potentially a happy conclusion. But are they really talking? Are they really negotiating? Well, Washington says yes, they are. This is what Trump had to say. They had a meeting this morning. It doesn't matter who they are or they is. I don't know what that English is. We may reveal it later, but they had a meeting this morning, and we've been meeting with China. That's what Washington says. However, Beijing says no. They haven't been talking. This is from the spokesman of the Ministry of Commerce. I won't try to pronounce the name because I'll butcher it. I'm rubbish at names. But he said, at present, there are absolutely no negotiations on the economy and trade between China and the US. So the US is saying, yes, we're talking, and it's looking good, or we're making progress. China, on the other hand, says no. And don't forget, China has said before they were willing to talk or negotiate, they want a little bit of respect. So very, very confusing on what is actually happening. However, the Trump administration has indicated this week, this is why we've had a bit of hope in the market this week, has indicated this week there might be a easing in tensions with China. As well as that, there are reports today, certainly from CNBC, that China are quietly rolling back on tariffs on US semiconductors and maybe on tariffs on US liquid gas imports. Now, clearly, obviously, this is a strategic move by China on this because semiconductors and gas, they can't do it themselves. So, you know, in my mind's eye, it does certainly look to me that both are playing hard to get. Neither one of them wants to acknowledge that they blink first or they're backing down. But maybe, just maybe, quietly, behind the scenes, they both know the implications of this ongoing trade war and what it means to them and what it means to the global market. So maybe, just possibly maybe, they are quietly, without revealing their hand, trying to dial, both of them are trying to dial down this whole tension of this trade war. But what's that mean for the market? Well, like I say, to be fair, there is realistically much rejoicing in the market. Much rejoicing in the market. It's enjoying a happy period for a change. We've had such a dramatic, heavy, tense couple of trading weeks. It's nice to see the market having a period where it's a little bit hopeful. And don't forget, it's already started on Tuesday. I mean, it's been a hell of a week if you think about it. What a week we've had. It's a short week as well with the Easter break. Monday we had Trump and the Trump administration looking at ways to fire Powell, which put the market into a panic. Tuesday, we had words saying, I'm not going to fire Powell, I'm not looking to fire Powell. And then even chat now about lightening tensions with China. Apparently Trump's going to be very nice to them. So that's giving the market a boost. This is what the market needed. A little hint that maybe we can sort out these issues which have been weighing heavy on the minds of the market for so long. And like I say, the knock-in impact has indeed, we've had 3 days of gains in the market. 3 days of gains. Let's have a quick look actually at, unfortunately we're earlier today than we usually. So the US market has not quite opened yet, but let's have a quick look. We'll have a look in a minute when it has opened as well. But as you can see, the S&P, like I say, it's had 3 days of gains. It closed yesterday around 5,484 points. It was only a little while back. It was 4,800 points. So under a lot of pressure. Same with the Nasdaq again. Much rejoicing in the tech industry, and there's another reason which we'll talk about in a little while. Again, performing very well. Like I say, closed yesterday 2.79% higher. And the same with the Dow as well. Actually was up. It's actually trading now, but it was actually up yesterday by 500 points. So yeah, even that had, like I say, had a really good. Like I said, we've had much rejoicing in the market, which is greatly needed. Excuse me. Little sip of my now cold coffee, unfortunately. And another story I want to talk about. Again, this is implications of this trade/tariff war, etc. There is a couple of concerns as well about this summer in the United States, the summer of revenge, they're calling it, because this summer in the US looks like it's going to be a real challenging one for businesses in the tourist industry, in the service industry, because the latest report from the Fed Beige Book said and reported this: travel from Canada declined noticeably, and contacts fear that summer travel from Europe and China could suffer due to the negative reactions to the US tariffs. Now, if we have a quick look at this one, got ahead of myself. Have a look at this. We can steadily see there's been a decline in tourists traveling to the United States. And there's several reasons for this. Obviously, yes, Canada in particular are very upset by their neighbor implying the tariffs they've applied on them so far. But the rest of the world are also very upset. There's also no point of hiding this either. Is that a lot of foreign governments are warning their people at the moment not to travel to the United States. And that's nothing to do with tariffs or this trade war. That's to do with the current administration's immigration policy and the aggressive nature of it. So they are warning people, both for business and for leisure, to be on their guard and maybe not visit the United States. So this is a key thing, and this is an important thing for the United States because it does tourist sector is a big part of its industry, and if the service industry does start to suffer or buckle under the weight of the lack of tourists, then of course we're going to see quite a few job losses happening in the near future. So this is an interesting story to keep an eye on, especially as it develops, because again, the implications of this whole thing, and again, this is not just to do with tariffs. Again, like I say, this is to do with the current administration's approach to immigration as well. This is also what is affecting these numbers as well. So it's that as well, not just tariffs. But like I say, there's a whole big story unraveling at the moment. Something else I want to talk about as well, which is having a good time of it, and that is Google. Yes, as we mentioned in yesterday's video, their earnings report was due after the closing bell, and it was indeed good news for them because the earnings reported was a lot better than anticipated. Revenue was at 90.2 billion versus 89.1 billion expected. On a side note, this time last year, their revenue was around 80 billion. So again, we can see steady growth in there. And as you can see from this little thing here from Yahoo Finances, you can see obviously the bulk of their income is still from search ads like this, but they have noted there is a steady growth as well in online advertising as well, advertising revenue they're generating. Now, the question is, of course, and they did say this in the report, their forecast for Q2, that will have to be closely monitored because obviously of the growth potential happening in the current world of tariffs. So anyway, for now, they've had a bit of a boost on that, and everything is, they're very happy. And of course, this is, of course, given a boost to the other Max 7 companies, which we'll have a look at in a minute when the market is open in about 50 seconds. But yeah, it's even a boost for the other Max 7, which means we have some key earning reports still to come, which is worth keeping an eye on. These include the likes of obviously Meta, which is the next big one, due on the 30th. Microsoft, also due on the 30th. Amazon, due on the 1st of May. And Apple, due on the 1st of May. Now, I think it would be quite interesting to especially keep an eye on Meta, because obviously if Google or Alphabet are boasting about an increase in advertising revenue, Meta obviously makes that a big general source of their income as well. So it would indeed be interesting to see where they are with that. And if they are actually competing, or have a performance as good as Google did. So again, 30th of April for Meta, I think that's going to be really, really interesting to keep an eye on and pay attention to. We won't look at the Max 7 yet because, like I said, I want for the market to open. But what we will do is we will have a currency update. So yeah, let's have a quick look at some of the currencies, because obviously over the last couple of days with this hope, the dollar has been performing quite well. But let's have a look, see how it's performing at the moment, and bring up the whole chart. So give me a second here. Here we go. So this is obviously on a 30-minute. Again, like I say, the dollar's had the best rally in the last 2 weeks against the majors. A little bit, like I say, flatline at the moment with the euro, currently trading 113 on a long, bigger picture, as you can see. Okay, like again, the euro's been having a really, really good run. Slight dollar strength, but not really enough at the moment to take the wind out of the single currency sale. Same with the cable as well. I didn't say the dollar has been performing very well. Best rally in 2 weeks. Again, cable still holding its own. And more interestingly enough, let's look at the dollar yen. as well. And again, don't forget, it was under a huge amount of pressure. The other kind of trade, 4 trading sessions ago, touched 139, but now back up to 143. So we are seeing dollar strength. It's Japanese yen. Interesting enough, next week is going to be very interesting for the yen, as we do have, of course, the Bank of Japan interest rate decision, which we'll talk a little bit more about that in a moment. As we're looking at currencies, it wouldn't be one of my broadcasts without talking, of course, about gold, because we all know gold is the love of my life when it comes to trading. And as we can see, again, off the highs it touched on Monday, where it hit $3,500. Since then, because of dollar strength, because we've had a little bit of hope that China and US are looking to be friends again, we have seen a little bit of a sell-off from the yellow metal for its safe haven status. Currently trading at $3,268. However, like I say, on the daily, it's still way above that trend line. Key level for me to see if anything potentially changes is $3,100, where that trend line is. So I'm keeping a close eye on that. I mean, I was having another thing about gold as well. I was having this conversation with an associate of mine, and I said I've never quite seen, and I've been watching and trading gold since 2006, very long time, and I've never quite seen this bull run at the moment. So it'd be interesting to see eventually, if hope continues, whether or not this bull run will finally potentially run out of steam. But we keep a close eye on it. As we're here now and the market's open, let's look at the Max 7, because we're talking about that. First of all, let's talk and look at Alphabet or Google. Okay, as you can see, because of those really positive earnings it did open with a gap, currently up. It was up higher in pre-market, but it's currently open as the market opens at 3.10%. So really benefiting from that positive earnings report. Meta also riding on the coattails, A, of Alphabet, but B, because of the slight hope in the market. Currently up as well, 2.13%. Again, open with a slight gap. Microsoft, not open with a gap, only up slightly. Amazon, again, no real change on that. Apple, again, but Meta would make sense, because obviously the market is looking, and this is why I think the earnings report on the 30th is going to be pretty important, or very important, because obviously the market is looking at Alphabet. If their advertising revenue is increased, potentially, does that mean Meta's revenue is increased? So it explains why those two are both benefiting from very good earnings yesterday. Okay, anyway, next week, I'm hoping next week we can talk a lot more about other stuff other than tariffs and a trade war, because that's all we've been talking about the last couple of weeks, it seems, months even. But we do have some key economic data coming out next week, which can indeed impact the market. I hope we talk more about that. We focus on that more next week. This concludes EU consumer confidence, US consumer confidence, Australian CPI, German GDP, US GDP. That's going to be interesting. Bank of Japan interest rate decision, as I mentioned, EU CPI, and US non-farm payroll. So a lot of data happening next week, a lot of potential drama. I think the US GDP is going to be quite fascinating to watch. NFP, I think the labor market isn't really showing signs of slowing down at the moment, so that might be reasonably probably close to what the expectation is, unless we're completely shocked by it. In fact, like I say, US initial claims yesterday ticked up slightly higher than anticipated, but not like mass warning signs. But anyway, I think US GDP is going to be quite fascinating to watch. But never ignore the US NFP just in case. Don't forget, this is of course a live broadcast, so you can ask me questions anytime you want, or say hello, or share with me your ideas, your opinions. Let me know what you think, or simply say hello if you like. The other thing, if you're watching me obviously on YouTube, because it's being broadcasted on YouTube at the moment and on Twitter, if you like this sort of content, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live, which is practically every trading day. And if you like the sort of content that you put up with me, give me one of these. It's nice to know that you like what I do. At the same time, if you're watching me on Twitter and you quite like this sort of content, by all means, follow us if you like, or give us a little heart. It's up to you. On another thing, if of course, what I have noticed, a lot of people do go back and watch the recordings later on YouTube, which is great. If you are watching the recordings, and you have a comment, or you have a question, or you have an opinion, put it in the comment section below. I will see them, and I will reply to it next time I go live on air, which of course will be Monday. I'm back on. Okie dokie. If there is no questions, not a problem. Not a problem. Leaves me to say, of course, as always, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.